the gambling and having the bet, and they'll just take a licensing fee. And both of them, Bob Iger said a version of that a couple years ago. Bob Chapek, who succeeded him just this week at a Goldman conference, said we would never embed gambling in our products, but our audience likes it, our users like it, and frankly, cable TV, it's fraying around the edges. Streaming is where it's at, and sports gambling is a hook into a younger audience.
You could so see it, though, because of ESPN and all their coverage, that it would be so easy to embed it in, right? If you think about it. Tell us about Adam Schefter.
Adam Schefter is an axe. He is the senior NFL insider on ESPN. His stock and trade is breaking all sorts of news and minutia and gossipy news you can use about trades and injuries and starting lineups, the kind of stuff that sports fanatics really feast upon.
Right.
He's got a massive Twitter following, 8.2 million followers. He also is now investing alongside Bob Kraft, the owner of the New England Patriots, in a little gambling startup. And
how is that okay?
Well, I called up ESPN and I said, do you folks have an ethics policy or guidelines about how your employees invest outside the company? And they said, we won't comment on that. As to whether they had a policy or whether Schefter violated, because the issue here is if you see him speaking on screen going forward, is he talking his book, so to speak? If he's got an investment in a gambling company, is he offering unfiltered and objective information when he's a broadcaster on ESPN?
So we don't know if they're going to be putting up a disclosure, if he's going to talk about a disclosure. We don't know if he got a special exemption to. I would imagine it's, this is ABC we're talking about. They probably have rules in place.
They ain't saying, Tim.
Wow.
They ain't saying.
Maybe if
Cue cricket, silence.
If you have 8.2 million Twitter followers, then, you can kind of do what you want.
I also sort of wonder if they were, maybe they didn't know he had this investment. It was just disclosed this week. Who knows what he told his bosses? But he, as an individual, if his relationship to viewers is, I'm giving you pure information that helps you enjoy the game more, and then there's a group of gamblers who are like, well, that also helps us make money more.
And that's what it's ultimately about, right? I mean, Disney trying to figure out what is the Disney of the future and how do you create new revenue streams.
Correct.
So this coming at a time when investors are a little concerned about the growth of Disney Plus. We saw that play out in recent days. Would this be happening, Tim, this investment be happening, do you think, if we wouldn't see the decline of traditional pay TV, traditional cable TV, just in 30 seconds?
Sports betting is booming, so it might have happened anyway, but they get the added 2-for-1 benefit of also addressing some of their audience concerns.
Do you think it would have happened if Bob Iger was still there?
Possibly.
Oh, okay. So that they, we're certainly considering it.
Yeah.
Good stuff. So great to have you come back.
Thanks for having me here.
Love it, love it. Tim O'Brien, senior columnist at Bloomberg Opinion. I wonder if Adam Schefter got called to the office. Adam Schefter, could you come to the ESPN office?
We'll see how the
could you tell us about this company?
I need a tip.
Exactly. Check out Tim on Twitter at Tim O'Brien. Of course, Bloomberg Opinion, senior columnist in our Interactive Brokers studio.
In just a few minutes, we are, of course, going to be doing the Song of the Day, the chart of the day, and the stock of the day. Dave Wilson is going to be in here. I'm just going to throw this out there. It's Bruce Springsteen's birthday today.
So you think it's
I think it's going to be a
song?
Bruce song.
Well, there's a good guess.
Yeah.
And let's not forget that we've got a rally underway, folks. We're hovering near our best levels of the session, up 1.4% on the S&P, 1.7% higher on the Dow.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Happy birthday to you.
Maybe, I don't know.
Happy
I don't know if I just
birthday to
upset. I might have upset Dave because I'm so excited about the song because I think I know it's going to be the artist.
I know, but he said, yeah, you may know the artist.
Yeah,
but
but
you may
I'm not
know
going to
the
get the song.
All
But
right.
we could be completely off.
Dave Wilson's coming up with his chart of the day and the song of the day. Hey, Charlie Pellet, take it away.
What was the birthday song all about? I hear you
Whose
singing.
birthday do you think it would be that Dave Wilson would be really excited about?
Bruce Springsteen.
You got it.
All right, I'm brilliant. That's why I do the business. Here's what's going on. Developing story. New York City lawmakers passed a set of bills aimed at improving working conditions and pay for app-based workers, becoming one of the first cities in America to significantly regulate the food delivery industry dominated by DoorDash, Grubhub, and Uber. DoorDash shares, they're down now, little change, down less than 0.1%. Uber higher by 1.7%. Stocks rallying for a second day as investors embrace the Fed's bullish economic outlook while downplaying the risk of contagion from turmoil in Chinese debt markets. Yields jumping worldwide. Right now we've got the 10-year yield 1.40%. Equities higher across the board. S&P up 56, up 1.3%. Dow Industrials up 536, up 1.6%. NASDAQ up now by 163, up 1.1%. Let's see how things shake out. 28 minutes to go ahead of the close. Gold down 1.1%, 17.49 the ounce. West Texas Intermediate crude up 1.3%, 73.15 a barrel on WTI. FDA says people over age 65 and adults at high risk of severe COVID-19 who have previously taken the Pfizer-BioNTech vaccine can get a booster dose, opening a new round and more controversial phase of the U.S. immunization campaign. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
Big picture, I think these boosters will be somewhat helpful, but not a game changer for the people who receive them. We're talking about a modest decline in effectiveness and a little probably temporary bump up from the booster. The really important thing, though, is to get people who are totally unvaccinated vaccinated. That's just a huge jump in protection.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names we follow, Pfizer up 0.8%. ADRs of its German partner BioNTech up 4.6%. ADRs of AstraZeneca up 1.4%. Moderna out of Cambridge up 3.4%. J&J up by 0.7%. Recapping, S&P up 1.3%. Happy birthday, Bruce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
How many candles on that cake?
Thank you so much, Charlie Pellet. This is Bloomberg.
'72 old,
Wow.
born on this date in 1949. So there you have it.
That's pretty wild, right? You think about that?
Yeah.
Whoa. That's wild.
I imagine he'll start. Is he going to tour again, do you think?
Well, I
the
mean,
other
that's
side of
the
this?
question, and certainly people
still
like me are
young.
waiting for the answer. Well, his mother's still alive. She's had Alzheimer's for the last several years, but she's also in her 90s.
Yeah.
So
72 to me is a young age, like nowadays.
longevity kind of lives in the family, or so
Yeah.
it seems. But in any case,
Glory days.
yeah, I mean, it's not the glory days for commodity producers. How's that? I mean, they had glory days years ago. You go back and look at their shares, and well, a lot has happened since then. And what's particularly interesting in the last 18 months or so is, we got to the lowest level on the Bloomberg Commodity Index in March of last year since 1974. And back then, if you put together the energy and materials companies in the S&P 500, they had a combined weight of about 5%. Well, here we are, The commodity index has risen 63% from that low. And you look at those two industry groups, and their share of the S&P 500 is still about 5%. So nothing's really changed. Even though the prices of what they produce are going up, the shares aren't gaining any more influence within the index. It's not to say they haven't done well. I mean, you look back to March of last year, energy has been the second best performer among the 11 main industry groups in the S&P 500. The problem is the number one performer is technology, which is also the biggest group. So, in other words, even though, you've seen the commodity markets turn in favor of these companies, it really hasn't given them any more clout in the context of the index.
And safe to say that a lot of it is energy? I mean, if you to pick your commodities, right? Or
yeah, I mean,
is
in
it
terms of the
copper?
Gains in the commodity markets, yeah, I mean, that's
Yeah.
a piece of that. I mean, in terms of the weightings, energy and materials, roughly half and half.
Okay.
In other words, out of that 5%, they're each
They're half
about
and half.
2.5. So it's not like one dominates over the other.
What?
Still thinking about Bruce's birthday.
Yeah, and
I feel bad I gave it away.
here's some news for you.
I do. Tell me.
No Nukes, you may remember his performance in that movie back in 1979. His entire show is being released as a video.
Oh, wow.
It's already come out in audio as part of an archive series, but that's the big news of today. It'll be available on DVD and Blu-ray starting in November.
DVD,
and no, he doesn't pay
Blu-ray?
me.
What is that? No, I'm just kidding.
Well,
From the woman who used to own
She-
laser discs.
she
It's like
wants
embarrassing.
the streaming version. Can't you see the Broadway show on Netflix?
Oh, is that on?
I think so. I
yeah.
could be wrong about that.
Yeah.
Yeah. Okay.
All right.
Yeah, you can stream that, Carol.
But hey, that's the Broadway show.
Exactly.
No Nukes was a whole different era, 1979.
It
I'm
was a
looking
whole,
forward to
like,
that.
that was, you had a
And
lot
we
of
only saw
people
3
speaking
songs
out
in the No
against it.
Nukes movie, so you get all the rest.
Yeah, what do you want to say?
I want to make sure I leave time for stock of the day.
All right, let's do it.
PTC Therapeutics. It's a drug developer. Been working on a candidate for Huntington's disease, and gave an update today. And let's just say it didn't go over so well. The folks at RBC Capital Markets were, among other things, trying to figure out if there was some way that it might be accelerated in terms of approval, and didn't see it. They raised a couple of other issues as well, and you put it all together, this stock is headed for its biggest drop in 18 months. PTC Therapeutics, the ticker PTCT, is down about 11%.
All right, good stuff.
Kind of hard to find decliners on a day like today.
Well, this one certainly
Got it.
qualifies.
It does. It does. In the S&P 500, 439 stocks higher, 66 lower.
All right, Dave Wilson,
good one, Dave.
what are you going to do to celebrate Bruce's birthday tonight? Anything?
I'll go home and put on some music, of course.
All right, good stuff. Old stuff, new stuff?
Yes.
Okay.
Check
Done.
out Dave's stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave. Thanks so much, Dave Wilson, stocks editor at Bloomberg Radio and Bloomberg TV. Let's get to Washington, D.C. for an update of world and national news. Hey there, Nancy Lyons.
Hey, Tim. Following meetings at the White House, the Democratic leaders of Congress said they've made significant progress in bridging the gaps among their members. Bloomberg served Chapman with the latest.
Senate Leader Chuck Schumer made a brief announcement.
The White House, the House, and the Senate have reached agreement on a framework that will pay for any final negotiated agreement.
Speaker Nancy Pelosi indicated there's a lot still to negotiate.
We have consensus in overwhelmingly as to these priorities. It's about specific legislation. How much does that cost? How do we pay for it? What would you cut? That will impact the choices we make there.
Pelosi also said she's confident Congress will pass a resolution allowing government spending beyond September 30th. In Washington, Irv Chapman, Bloomberg Radio.
The House committee charged with investigating the January 6th siege on the Capitol could soon begin issuing subpoenas to Trump aides. House Minority Leader Kevin McCarthy, who is an ally of former President Trump, says he has not been served yet.
This is more about politics than anything else. There's only 2 questions that this committee should actually be looked upon. Why was the Capitol left so ill-prepared? And how can we make sure that this never happens again?
McCarthy did talk on the phone with President Trump on January 6th while the pro-Trump crowd was attacking the Capitol. The EPA is sharply limiting domestic production and use of highly potent greenhouse gases commonly used in refrigerators and air conditioners. The new rule on hydrofluorocarbons is intended to decrease those gases by 85% in the next 15 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. It's Thursday, Friday's Eve. Carol Master along with Tim Stenovic. Check out the story by our Scott Carpenter of Bloomberg about the husband-wife team worth a cool $12 billion after their latest funding round.
It's an entrepreneurial story. You find a problem and you create a solution for it. And this story is no exception to that rule. As Scott writes, it all began with millennial angst at user-unfriendly software. Well, teaching design programs part-time in 2008 when she was at the university in Perth, Australia, Melanie Perkins grew frustrated with the clunky desktop-based tools she was helping her students understand.
She says Facebook was taking off at the time. People could jump in and use that so easily, and yet design tools took years of training to learn. She talked about this back in 2018. I wanted to make design software simple, online, and collaborative, and it's a good formula.
Yeah, the funding round last week valued their graphic design company Canva at $40 billion. It gave Perkins, who's 34 years old now, and her husband and co-founder Cliff Obrecht, who's 35, a fortune of $5.9 billion each. That's according to the Bloomberg
Honey, you're worth
Billionaires
6 and I'm worth
Index.
6. That's not too shabby.
No, this is cool.
Yeah. Well, and it's as you say, it's a great story of entrepreneurs. So many times I feel like when it comes to companies that become something significant, big, worth a lot of money, go on to many funding rounds or become public, is people who are doing something and be like, we could do this better. And they just come up with a solution and then run with it.
It's also a cool story because we hear so much about the distribution of billionaires and startup founders in just a handful of pockets, a lot of them in the United States and a handful of them in Europe. But they're in Australia where you don't have a lot of,
It's not a hotbed of innovation, perhaps?
Well,
or is it?
Or that just doesn't have it doesn't have as many unicorns. I mean,
Right.
unicorn is a term that's fraught right now too, because there are so many companies that are valued at over $1 billion.
Their company is now the 5th largest startup in the world, according to data from research firm CB Insights. And Perkins, the richest self-made female billionaire under the age of 40.
Wow. Check out this story. It's available
it's
at Bloomberg.com and the Bloomberg Terminal. A top read story this afternoon for good reason. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Stocks off session highs, but still green on the screen, and S&P is on pace for the biggest two-day gain since May. Stocks are rallying for a second day as investors embrace the Fed's bullish economic outlook while downplaying the risk of contagion from turmoil in Chinese debt markets. Yields jumping worldwide. We've got the 10-year now at 1.41%. S&P up 57 points, up 1.3%, again off session highs. We've got the Dow Jones Industrial Average up 533, have been up more than 600. Right now a gain of just about 1.6%. NASDAQ higher by 171 points, up 1.1%. NASDAQ 100 index up now by just about 1%. Gold down 1.1%, 17.48 the ounce. West Texas Intermediate crude up 1.3%, 73.18 for a barrel of WTI. Brent crude futures settling at the highest since October 2018. Barrel of Brent 77.19. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Business Week, and it's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
On Wednesday, the Fed told investors more or less what they'd expected to hear, that it will most likely start tapering its bond buying program soon, inflation is still deemed transitory, and the medium-term forecast for employment is a jobless rate below 4%. Viewed as a central case scenario, the central bank's outlook is defensible. Yet Fed watchers would be foolish to get too complacent. The range of uncertainty around these projections is only getting wider. So what should they look for? For investors, this means judging asset prices with due skepticism. For the Fed, it means keeping an open mind on incoming data. For Washington, it means removing debt default from the bundle of self-inflicted risks confronting the economy. It will be bad enough if the shadow of a pandemic, despite the Fed's best efforts, confounds policy and brings on a new period of stagflation. The possibility that Washington could summon such a crisis out of recklessness is something else entirely, and sadly, not to be ruled out. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. Just about 10 minutes left in today's trading session. So just a few minutes to wrap up that Thursday trade. We are hovering near our best levels of the session. So as Charlie mentioned, really seeing some decent gains, 1.3% higher on the S&P, 1.5% higher on the Dow, and up 1%.
I think that's more than decent. Do you?
It's not decent if you're shorting the market because you'd be like, I'd love to see a little bit of selling.
Well, you saw some on Monday.
We did, but we've made back that ground in a big way. Doug Sioka is CEO and partner at Kavar Capital Partners, $1 billion in assets under management. Back with us from Leawood, Kansas. Doug, how are you?
I am great. How about you guys?
Doing well, doing well. It's been another, I hate to use the word interesting, we overuse it, but, there was fear in the markets on Monday. I was reading something about JP Morgan, who was talking about fund flows, ETF flows out on Monday, about $11 billion, which was, I think, the biggest on a down day this year outside of quarterly options and futures expirations. And then here we are, a rally, and we've bounced back significantly. How do you see the internals of the market? Is it fragile? Is it confident? Is it strong? What do you see?
Well, I think it's more confident than it is fragile. It may be a little tired, right? I think it might be calm but not complacent. And to your point, Carol, I mean, you're coming into this week off of a down week and a really bad Friday, which was a quadruple witching Friday.
Right.
And you kind of had this trifecta of fear that was percolating over the weekend. Obviously, the Evergrande news and the prospects of it having the capability to catalyze a global credit event, given kind of its precarious lending position. You had the Fed meeting, right, timing and intensity of whatever tapering or tightening communication they were going to provide. All the nausea, as was just mentioned in that Bloomberg opinion piece preceding our segment, of these political debates domestically, debt ceiling concerns, all the bureaucratic bundling and continuing resolutions, and throwing a fourth deal, right, is seasonality, which seems to be getting a lot of time and attention, and was even typified in some of the fund flows that I read that you mentioned about J.P. Morgan earlier this week. So if you have all of those things, right, you go into a market that becomes incredibly oversold, right, after the Monday down day, and it was down 1,000 points with about 40 minutes to go, and massive futures buying came in, and then everyone hoped for this turnaround Tuesday, and that fell flat. But then ultimately the Fed comes out and I think threads the needle yesterday and injects more optimism back into the market that carried through yesterday afternoon and all of today.
Hey, I just want to go back to Evergrande because is the market telling us that this is not going to be a global credit event?
I think the market is telling us that, Tim, and I think a few things, right? Why would we fear Evergrande? And I think it's not so much from a Lehman-like credit catastrophe, but more from a consumer demand destruction in the U.S. and Europe, and a business demand destruction prospects in other parts of the world, right? China's financial system is still in many respects closed, but as the impact of the purchasing power of those that are most adversely impacted over in China that could ripple through the global economy. I actually read an awesome article. I think it's going to be the cover story for next week's Bloomberg Business Week edition. It takes a really deep dive on the evolution of Evergrande, its prospects for recovery.
Yeah, it's our international cover actually this week.
Okay. So the best line I thought of the whole article was, Chinese leaders speak of the goals of moderate prosperity and common prosperity, and households accumulating more debt to buy multiple or luxurious homes doesn't sync with that vision. Right. I thought that was fascinating, right? Ultimately, it's hard to square communism and capitalism, and I think the market created a lot of volatility trying to piece those together.
So dips. When are dips buying opportunities, and when are dips a sign of the beginning of a correction?
Yeah, I think, and I actually keep taped on one of my screens at work, my main man of all time, Peter Lynch, and he said more people have lost money anticipating corrections than in the actual correction. And I think we need to adhere to that, considering time in the market, not timing the market. However,
but you know what I mean. Come on, we can be smart.
There's a however here.
Right, exactly.
Right. I mean, right now there's just so much cash, and we've actually done a deeper dive. And what does that mean? Everyone talks about cash on the sidelines. Well, where is this cash, and where are these sidelines? Well, there is a lot of money that is looking to find an entry point, and this is the first 5% pullback we've had in a year. Maybe that speaks to the seasonality impact. It was not on a closing low, but an intraday low. We saw a 5.2% pullback September 2nd to 21st. Last one was a 9.5% in September of 2020. So you have you have a lot of cash, you have low interest rates, and Jay Powell just said yesterday they're going to stay low for a while. That's hardening for risk assets. And then you have market multiples that are improving, right? So you have an S&P that's up 17, 18% for the year, and it's selling at a lower, a cheaper multiple than it did in the first of the year. So for people that are concerned about a dip turning into a correction, you need to typically have earnings rolling over and a Fed policy mistake. And I don't know how we have a mistake, because we have the most telegraphed and transparent Fed move in history the next time that Fed actually pulls the trigger.
I mean, they basically are, I keep saying this, but they are spoon-feeding us. And to be fair, Mike McKee said Jay Powell did a great job yesterday. I mean, the markets kind of got it, understood it, and are off and running.
I agree. I mean, I think they've done a good job for quite a while, Carol, but yet it seems that, like, ahead of every meeting, there emerges this deep-seated fear that Powell is going to disclose some alternate agenda, or suggest that his open market committee has overtaken his influence, and the market's going to be left to ascertain what that all means. But he's doing everything he can, in my opinion, to thread that needle between stimulating the economy and not provoking hyperinflation. And it's a real-time experiment or exercise. But again, the transparency is I think, the big asset for him.
All right. Any nervousness out there? Just got about 30 seconds left. Always.
Oh, gosh, of course. I mean, and we talked about this a couple months ago. Our challenge right now in sourcing client or investing client capital is in fixed income.
Yeah.
And
Right.
you know that it's impossible to predict the returns in the credit markets over the next 20 years that we saw in the last 20. So we're spending a lot of time there, and of course that makes us nervous. Absolutely.
All right, we're going to leave it there. Always good to check in with you. Be well. Doug Sioka, he is CEO and partner at Kavar Capital Partners, $1 billion in assets under management, joining us once again on the phone from Leawood, Kansas. Folks, we've just got a few minutes left in today's trading session, and we are going to, at least at this point, it looks like we're going to finish just off our highs of the session, but we are definitely seeing about a 1.25% gain right now on the S&P, 1.5% higher on the Dow, and the NASDAQ, Tim, it's 1% higher. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the closing bell on this Friday's Eve.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs, all three of us counting you down to the closing bell. And we're going to add two folks here to help take us beyond the bell. It's Carol Master and Tim Stenovic. We love both of them equally, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, I got to start with you here. I mean, the sentiment that we saw yesterday seemed to be a little bit mixed coming out of the Fed meeting. Today, it is decidedly positive. The idea here that there's good economic growth and a relatively accommodative Fed.
Well, and the Fed, we were just talking with Doug Sioka over at Kavar Capital Partners, and he's, the Fed has done a very good job, he said, or Mike McKee saying the same thing, in telling and really giving indications of what the Fed policy will be going forward, getting more and more specific, and really giving a lot of investors information, Tim, about what is next.
Look, we made a lot of the sell-off on Monday, and for good reason. It was the biggest one on the S&P 500 since May. But here we are just a few days later, and since then, if stocks close where they are right now, the S&P 500 will be higher from them by, close to 0.4%.
Yeah, and we see actually at one point the S&P having its best day since back in March. Every industry group rising on the day, but it was this, Taylor, dare I say it, and this is music to your ears, the bond market leading the equity market? How much was this in the sector side? Definitely like following where the bond market was going.
It's like catnip to my ears, Caroline. But in all seriousness, it was Elaine Stokes, I would say, over at Loomis Sales Remain, who really, as you were talking about some of the Fed mentioning yesterday, some confusing the reaction in the bond market today is much more, I think, what people were expecting, the higher growth, higher inflation expectations, given a pull forward of maybe the taper and a hike.
Yeah. Well, like I said, sentiment definitely positive today. Maybe it was the therapy puppies that did it. Dow Jones Industrial Average looks like it's going to finish the day.
We love that
by
story.
about 500 points or 1.5% here. You're looking at the S&P 500, 53 points higher, 1.2%. It's still down about 1.6, 1.7% from that all-time high. So it's got a little ways to go to reclaim that. The NASDAQ getting in on the action, 155 points to the upside, up about 1%. And your outperformer, again, if we talk about the cyclical trade, that reflation trade, a lot of that reflected in the Russell 2000. The Russell 2000 up right now by about 41 points here. That's about 1.8%.
I just want to know when, dip buying opportunities, when it's actually dip buying is a sign that we're going to trend lower and get some kind of correction, because it seems like investors...
You want a correction?
Well...
We just had a correction. It was 4%.
Was that a correction?
That's the new correction.
We still haven't seen the 5% figure.
It's not a technical correction, right?
It's not a technical correction. Given how far we've come in the S&P 500 this year, that's a minor pullback.
I don't know.
Gloomy in that studio. You guys have some puppies or something.
I can bring you some
cranky here.
Positivity, Carol, if you wanted, on our sector for
therapy
the winners
puppies for everyone
and the losers. I would raise your therapy puppy with a therapy cat.
Yeah, she's
a
cat
woman. But I digress. There's a lot of green on the screen here for the radio audience. Let's start with the sector winners, where it is that classic reflationary trade. It's energy, it's banks, it's financials. Why? Because this is a bond story. Yields are up 12 basis points on the day. Those sectors are up 2.3 to 3.4%. It is classic risk on, as those are the big outperformers. There are only two losers on the day, Carol, on a sector level, and it's real estate and utilities. And that's really where this bond story comes in. When bond yields rise, those are the sectors that you expect to be the big underperformers. They're off about 0.5%.
Lots of gainers out there. It was hard to choose. I did go to BlackBerry. That stock was up 11% in today.
Music to Taylor's ears again.
Pandering to Taylor.
We got the earnings last night.
We should fill everyone in. Taylor has a BlackBerry. Taylor has a BlackBerry.
I'm so jealous. Don't we all miss having a BlackBerry?
No.
Taylor missed it so much she got one.
That's kind of amazing, Taylor. Well, anyway, maybe that's why the stock's up 11% today. Adjusted revenue for the fiscal second quarter, topping average analyst estimates. Stock was also among the most mentioned companies in stock tweets over the last day. Do want to point out, though, analysts are rather cautious still on the company. It's up more than 60% this year. Do you remember, though, when it was $148 a share stock?
Remember when BlackBerry was like the hottest thing in the world?
Yes.
I mean, it was basically like the original smartphone, more or less, right?
I loved it. Crackberries, remember, we were all one of them. Carnival, got to mention it, up 4.6% in today's session.
Are you a cruise person?
Don't repeat that one again, Romain.
Okay, all right.
Expected to have more than half of its fleet.
I forgot, you have your own boat. You don't need Carnival.
Let's talk Carnival, shall we? All right. Expected to have more than half of its fleet capacity sailing again by late October. It's an important milestone on its goal to resume service. So it was up today. Darden Restaurants, Olive Garden, who doesn't love the breadsticks? This company rising to a record after boasting full year 2022 forecast, also announcing an additional $750 million share buyback. Do we not all love the... Okay, we've got breaking news. I can't talk about breadsticks.
Yeah, no, Tim, of course, I'll just break this quickly and get back to you. We're getting word here, of course, that a CDC panel unanimously has backed a Pfizer dose for people age 65 and older. There's been a lot of news about this week that I don't want to confuse, but here the headline, of course, now the CDC panel backing that Pfizer booster shot, that third dose, I should say, for about people 65 and older.
Yeah, and we should also point out this also includes people who are in high-risk jobs. So if you're under 65 but in a high-risk job, you would also be eligible for this. This includes basically teachers as well as first responders, as well as people who work in grocery stores and in other sort of forward-facing businesses.
And very much in line with the recommendation we got from the FDA last week, and this was widely expected, but you continue to narrow down in terms of regulators, and they will give very specific guidance to physicians on who should be getting this, Tim.
Yeah, a little movement in Pfizer shares after hours, higher by just about 0.1%. Let's talk about decliners, though, because it was a challenge to actually find stocks on a day like today that did move lower, but I was able to find a few. Let's start with Rite Aid, finishing the day down by, what was that, Romain?
Rite Aid is still around?
Yeah, it is. And, not having a great day, though. Shares falling by more than 6%. It did fall as much as 11%
We're bringing out the oldies today, aren't we?
The pickings were slim. You saw, Taylor, with the sectors, right? I mean, we had broad-based gains today. There wasn't a lot of red. So don't give me too hard of a time. Rite Aid came in, second quarter revenue trailed average analyst estimates. Shares fell as much as 11%, Caroline. Altice US falling as much as 8%, but now actually finishing the day down higher. Look at that, 12.6%. Late in the day, it moved lower.
Cable companies. So we've gone to BlackBerry, this is drugstore, and now cable.
I told you not to give me
on the cutting edge on this program, folks.
Well, look,
anybody for Blockbuster Video?
New Yorkers will be familiar with Altice. It's the company that owns Optimum, but Dexter Goey, the company's CEO, said the company expects to lose between 15 and 20,000 broadband customers this quarter, which is not a good thing, and the company's shares taking a hit, hitting a 52-week low. We're also watching Eargo, down close to 70% today.
Wow.
This is a
I love this story.
tiny company. Has a market cap just around $200 million. It fell as much as 71%.
Well, it had a market cap a lot higher than that.
It did. It did. Yeah. Among the most heavily traded stocks today in the top 20. This after the company revealed late yesterday that it was the target of a Justice Department criminal probe and withdrew its forecasts for the year. Solid downgrades as a result.
Down, down, down when you're looking at those three stocks. Down, down, down when you're looking at the Bloomberg Dollar Index, in fact. Let's go cross-asset because it's a sea of green on your foreign exchange vertical. British pound doing well. Now, this as we start to hear that the Bank of England, like the Federal Reserve, talking about pulling back on the stimulus, this time perhaps talking about interest rates rising. They've got 4% inflation rate. That's why we're seeing the British pound up 0.7%. Seeing the euro up to a similar degree, up 0.4%. So, and actually, a lot of the commodity-related currencies doing well too. Look at the Canadian dollar up 0.9%. This is oil is on a tear. We actually saw it closing at the highest since 2018. So once again, we're more worried about the supply side of oil. Natural gas again, taking a leg up almost 5% on the day. Interesting moves that you saw in terms of China pushing back on pork prices now. So we saw lean hogs on the higher side. Sovereign bonds, though, a story across the world, whether it be UK 10 basis points higher, Denmark, I'm looking at Canadian bonds, yields spiking. A lot to do with the Bank of England, a lot to do with the Federal Reserve, Taylor.
Indeed. Spiking is a great word, Caroline, and it's one that we don't use often, and when we do it, it carries a certain punch to it. Let's do it. It's 2 basis points higher on the 2-year, 8 on the 5-year. 12 and 13 on the 10 and the 30 year. So we are getting a lift up now to above a 142 and a 194 here on the 30-year yield. And Carol, this is so interesting. Most of our guests on this program were surprised by yields falling yesterday, sort of vindicated, if you will, of sort of this reflationary theme that we have seen underway. The Fed signaling that yesterday. Today's bond movement certainly confirmed that.
Yeah, it does definitely feel that way, that the bond market caught up with what the Fed said yesterday, because we are expecting things to start to slowly move back to normal. It's going to take some time. We know that from the Fed, but the equity market sounds like they got the memo pretty quickly or understood it, and that the bond market played catch up.
Yeah, and I thought Chris Gaffney over at TIA Bank said it best here. You know, just because the Fed is tightening doesn't necessarily mean that that's bad for equities, doesn't necessarily mean it's bad for the economy. In fact, it probably signals that things are actually good.
But are things actually good? Like the PMIs came out strong. We saw
Taylor, you need to look at the
50.
camera here. When we're all on the shot, do you know people take screenshots of us?
I
know,
but
and they
you're,
always
next
get
to
us
me,
making
so I
terrible
smile.
faces.
I can
We always look so
Caroline's
mean and angry.
right here. I could just reach out and grab her.
It's like the Brady Bunch.
Don't burst our bubble of what was that show where everyone was in
Brady
it?
Bunch.
Yes, Brady Bunch.
The
There we go.
Brady
We should all
Bunch.
look in different directions. For our radio audience, we digress. We go back
They
to
have
what
no
the
idea.
actual
They have no idea
information
what
is.
we're talking about.
Exactly. But I'm interested. We got Nike coming after the bell. Its numbers. Are we going to get
Yeah.
supply side issues from them? We had the FedEx
Right.
showing it earlier in the week. We've had continued concerns about some of these labor shortages.
Yeah.
Darden restaurants actually managing to sustain that hit to their margin and not pass it on in terms of higher prices.
Yeah, the supply chain story is really important for Nike. We saw BTG with that commentary a few weeks ago that sent Nike shares lower. But at the same time, with everything happening in China, what I want to hear about from Nike executives is what's the consumer on the ground in China like, with reopening, with closings, with lockdowns, with Evergrande. Close to 20% of the company's revenue comes from China. So this is truly an international company. It can give us a good idea of the health of the consumer.
And don't forget those boycotts, too.
Yes.
For our audience, quickly, we're looking at fourth quarter revenue expected to be about $12.5 billion. Like you said, Greater China revenue should be about $2 billion of it. Carol, I just bring you a quick note from Piper Sandler as we push forward to Nike earnings. They're really looking at a solid beat and raise here in North America and Europe, but there is that concern here about Vietnam and supply chain disruption.
All right, well, certainly something we'll be watching when Nike crosses the earnings. I know you guys will break it down, and so will we here on Bloomberg Radio. That's going to do it for our cross-platform coverage, Beyond the Bell, on Bloomberg Radio, Bloomberg TV, and YouTube. See you again tomorrow, same time, same place. All right, let's head off to World and National News and Nancy Lyons.
Democrats are reporting some progress on how to pay for their emerging $3.5 trillion social and environmental bill. Bloomberg's Washington correspondent Joe Matthew has the latest.
Speaker Pelosi announcing a framework deal has been struck. Didn't talk about an overall price tag or exactly what would be in that deal, but a deal to fund this $3.5 trillion bill, if that's what it ends up being.
Matthew says the House Ways and Means Committee has already approved increases to the corporate tax rate and on the capital gains tax rate. The White House is facing more fallout over the influx of Haitian immigrants along the U.S.-Mexican border. Press Secretary Jen Psaki says changes are being made in the way the Customs and Border Patrol operates following video showing officers on horseback pushing back against the migrants. Psaki says Homeland Security Secretary Alejandro Mayorkas has ordered an investigation and taken other steps.
The Secretary also conveyed to civil rights leaders earlier this morning that we would no longer be using horses in Del Rio. So that is a policy change that has been made in response.
Psaki also commented on the resignation of the special envoy to Haiti, who said he can no longer be part of what's happening. She says Daniel Foote's input has been welcomed all along the way. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Interesting story that is on the Bloomberg terminal has to do, first of all, it's by our Amanda Gordon.
Anything by Amanda Gordon is like, you got to read it. You got to read it. Well, what is her official beat?
I forget her title.
When I met her for the first time here, she told me, this was during peak COVID, she said, she used to just cover parties.
Right.
And she couldn't do that.
Right. Exactly. It's basically rich people.
It's great.
And she goes to the Hamptons, she goes to Palm Beach, she goes wherever they are, goes to their events. And what's incredible is she goes up and talks with them and finds out what's on their minds. And so it's a lot of fun. It's a kind of peeling back opening up the curtains, if you will, and getting a glimpse of another life. And this story is about Steve Schwartzman.
Yeah, and Central Park as well. So Central Park, it's not just a place for kids and dogs to frolic or to ride your bike. It's where titans of Wall Street get some work done, Amanda writes. This includes the labor of putting on a tuxedo and mingling and dancing to an orchestra, as Steve Schwartzman did on Wednesday night at the Conservatory Garden, helping to raise $2.8 million to support the Central Park Conservancy. But he's also doing actual work in the park.
And that's what's interesting. And there's a few executives, I think, throughout this story. This also talks about Dusty Phillip, co-chair of Global M&A over at Goldman. Next week, I'm meeting CEOs to have coffee in the park. Being outside solves a lot of COVID worries. This is something that's very true. It's certainly when it's warmer. I know I was more likely to meet somebody if it was warm outside. When it was cold, when we were in lockdown, not a chance. And even as we started to open up, I'm like, I don't want to be inside.
Yeah, I think we're going to continue to see outdoor dining be popular. I'll just tell you, last night I did go out to dinner, and it's not something I do often.
Outside?
Outside, yeah, outside. And it was great. It was beautiful. Back to the story, though, because Craig Huff, the co-CEO of Reservoir Capital, has been in the park every day. He says, quote, I walk while I'm on conference calls in the afternoons. I like that. Do you think people on the conference calls mind the birds chirping?
Probably not. And you get a little exercise, you're chatting. Why not? And Central Park, if you've never been there, it is incredible, and it's just one of our beloved parts of New York City, no doubt about it. You're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A Nike miss after hours. Nike shares down now by roughly 3%. Nike reported revenue for the first quarter that missed the average analyst estimate. Revenue $12.25 billion. Estimates were for $12.47 billion. Again, Nike shares after hours down by about 3%. Also reporting after the bell, we heard from Costco. It reported total company comparable sales, excluding fuel, for the fourth quarter that beat the average analyst estimate. Costco shares right now, they are trading little changed. It turned out to be an up day today. Stocks rallying for a second day as investors embrace the Federal Reserve's bullish economic outlook while downplaying the risk of contagion from turmoil in Chinese debt markets. Today, the S&P was up 53, a gain of 1.2%. Dow Industrials up 506, up 1.5%. NASDAQ up 155, up by 1%. 10-year yield 1.42%. We saw gold rallying today by moving lower, I should say. Gold down 1.2%. 17.46 the ounce. Crude up 1.4%. Crude rallying now at 73.25 a barrel. Tycoon Richard Lee's FWD filing for a U.S. IPO, seeking a New York Stock Exchange listing. That headline now on the Bloomberg Professional Service. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Nike, as Charlie mentioned, out with their earnings, and just a quick check on the trade here in the after hours, and we are seeing shares of Nike down about 3%. So let's get to it with Poonam Goyal, Senior U.S. Retail Analyst at Bloomberg Intelligence. She's on the phone in New Jersey. Poonam, like you always do, you go into the particulars of Nike. What stands out for you?
Inventory. Inventory was just flat year over year. They said that's partly due to more inventory that's in transit. You know, I'm very interested to hear on how much inventory is actually in transit versus what their expectations are.
Okay, wait, I just want to make sure I understand that. Does that mean it's stuck in container ships off the ports of LA and Long Beach?
That means it's stuck somewhere. So it could be anywhere when they say in transit. The question is, when will it hit the warehouses? When will it hit the stores, the distribution centers? How much is coming in? Is it enough? You know, that's really the big focus point going into holiday in the coming months. And I think that's where everyone is trying to get some sort of estimate on, you know, what the Vietnam closures did to inventory, and is it still something that we should be concerned about?
Is it the factory closures in Vietnam due to COVID, or is it the supply chain bottlenecks when it comes to supplies and shipping containers? Is it higher shipping costs? I mean, what seems to be the big issue that Nike's facing?
So the shipping costs are high, but they're paying for them. So that's not really the bottleneck to get supply in. The bottleneck is more the Vietnam closures, as well as just the shipping bottlenecks that we're seeing across the board with any company you speak to today. So in general, the demand is high, but the containers are being stuck. They're taking longer to get here. So it's a combination of those two things. I mean, keep in mind that, you know, Vietnam alone manufactures over 40% of Nike's footwear. So it's a big region, and it's a region where you can't easily transfer the production out of Vietnam to another facility, because making footwear is a skilled trade, and therefore you have to have specific factories that can only do it.
All right, so what might you hear that might freak you out a little bit from Nike on the call? What would say, okay, they've got this, and we understand it?
I think, you know, the Vietnam situation, if they say it's back on track, it would be something that would be a little more relieving to hear. If they say that the situation is such where the factories have reopened, but capacity is still, let's say, at 50%, that would be a little bit of a concern still. And then how much is in transit? I mean, that's really the question. Is it enough, or are we still going to be heavily chasing supply into the holidays? Because my concern is the sales that missed in North America and EMEA, was that a miss because of demand, which I don't think it is, or was it because they didn't have enough inventory?
Yeah.
We were talking about China a lot this week, and of course a lot on today's show, and one thing that sticks out to me is the Greater China revenue actually beating estimates, coming in at $1.98 billion. Estimates were at $1.96 billion. What is the story that tells you about demand in China?
It seems like, they've gained the background in China. So the issues that we saw at hand earlier in the year, it seems that those have now passed and that they are moving forward in China as they had expected. So it was encouraging to see that they actually met consensus there.
I do wonder, too, about the holidays a lot, Poonam, in terms of it's a big deal for a lot of companies who make any kind of goods, the holiday season, in terms of when they sell stuff. And I do wonder how much the bottlenecks, the supply chain bottlenecks, are going to mess all of that up for some of these companies.
I think, Carol, you're already seeing it. I mean, when I go to stores, when I check with just, the store reps and et cetera, I'm already hearing that things are out of stock in a meaningful way. So it's going to be a problem. I don't think it's going away. I don't think it can be fixed very quickly. We're already towards the end of September. I mean, holidays should be here by now, if not in the next 2 weeks.
So how does Nike get past this? Because it seems like a lot of this is out of their control, but it's what other retailers are dealing with as well.
Right.
Well, the silver lining here is that you don't have to discount as much, right? So if you don't have enough product, there's no reason to give it away.
That's a really good point.
So they will have better product margins, and we saw that. Gross margins were up in the quarter, and the underlying merchandise margin was probably even stronger, but freight costs are obviously hurting it in some way. So we'll see better margins, we think, over the holidays on a merchandise margin front.
Yeah, that margin number stood out for me, too. It did say something about their ability to hold prices, right?
Absolutely. But you do need product, right? You need product for the holidays. So they'll be air freighting a lot is our assumption. And I think they're going to push where they can to get the product here. There's only so much that any retailer or brand can do, though, right now.
Hey, Poonam, I wonder, in some of your long-term research, when you look at something like Nike and the Chinese market and the importance of it, the tensions that seem to be there between the U.S. and China, I mean, does a company like Nike have to worry about potentially in the future losing that Chinese market?
I think it's too early to say that. The China market is very important for most retail companies, including Nike. It's the growth engine, so it's an important market that they're after. And they have a pretty solid ground in it. The Chinese customer wants Nike products. So it's a big opportunity of growth. I don't think they'll let it go that easily, but they will have challenges along the way, and they'll just have to deal and kind of maneuver their way through them.
What's the question that you'd ask management on today's call if you could?
It's all on inventory. How much inventory will they have for holiday? I mean, that is my biggest focus going into the call.
It'll be a drinking game. How many times do you hear inventory between the executives and everybody on the call? Poonam, thank you so much. Poonam Goyal, she's Senior U.S. Retail Analyst at Bloomberg Intelligence. Shares of Nike, which were down as much as 4% in the after hours now, still a decline of about 2%. Really the big hit, first quarter revenue, missing estimate, and some concerns about those inventory levels. Big time, as you just heard from Poonam. You're listening to Bloomberg Business Week. Coming up, we're going to talk about Cisco Systems, sustainability, their goals. They've been in the works for years, and they've just revised some of them. We'll get to that in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. When it comes to companies that have been working on sustainability initiatives and reducing carbon emissions, Cisco Systems has been doing it for a long time.
Yeah, it certainly has. And joining us in just a few minutes is Fran Katsoudas, Executive Vice President and Chief People Policy and Purpose Officer. We are going to spend the rest of the show chatting with her, all things Cisco.
Got a million questions. She's ready. All right, we'll get to her in just a moment. First up, though, back to your top business stories. Some of the news after the close. Here is Charlie Bell.
Got to begin with Nike. Big story. Posted first quarter sales that missed Wall Street estimates as lockdown-related production delays hobbled the company's efforts to meet strong demand for shoes and athletic wear. Poonam Goyal is a senior retail analyst with Bloomberg Intelligence. She was our guest moments ago here on Bloomberg Business Week, and she told us that for Nike, it's all about inventory that is stuck in supply chains around the world.
The question is, when will it hit the warehouses? When will it hit the stores, the distribution centers? How much is coming in? Is it enough? That's really the big focus point going into holiday in the coming months. And I think that's where everyone is trying to get some sort of estimate on, what the Vietnam closures did to inventory, and is it still something that we should be concerned about?
And after hours, Nike shares down now by about 2.6%. Also reporting after the closing bell, Costco, fourth quarter earnings per share beat estimates. Costco shares up now by just about 0.4%. Stocks rallied today amid growth optimism. S&P up 53 points, up 1.2%. Dow Industrials up 506, up 1.5%. NASDAQ up 155, up by 1%. 10-year yield now up to 1.43%. We have got gold down 1.5% today. Spot gold down $26 the ounce at $17.41. West Texas Intermediate crude up 1.4%, $73.23 a barrel. S&P, by the way, registered its biggest two-day gain since July. Today's stocks rallied as investors embrace the Fed's bullish economic outlook. So again, recapping, Nike missed after hours, shares down by 2.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Cisco Systems, they set their first greenhouse emissions reduction goal back in 2006. Since then, the tech giant has continued to grow its sustainability initiatives and impact year after year after year. Earlier this month, the company announcing a new commitment to achieve net zero emissions by 2040 and more. Fran Katsoudas is a longtime Cisco executive vice president and chief people policy and purpose officer, and she joins Tim and me in our Bloomberg Interactive Broker studio. So good to see you again.
Nice to see you too. Thank you.
I feel like I do have a million questions for you, but we'll get as much as we can get in. First of all, before we get into sustainability, I do want to ask you about the visibility you see when it comes to your business and the company and hiring. What does it look like right now? And we're coming off a Fed meeting. We feel like we got a little bit more clarity. The market certainly read it that way. What do you guys see?
So we see a tremendous amount of opportunity. What's so fascinating is throughout the pandemic, we saw so many of our customers wanting to move a little bit more quickly from a transformation perspective. We saw that the issues they had been thinking about, they were ready to move. So what that means for us is we see a lot of investment in how they securely connect. They're thinking about having employees both on site, but also working from home, and that's a different technology play. From a people perspective, this has been one of the most remarkable times. Right now, people are talking about this period as the Great Resignation. Yeah. And what they mean by that is we see a tremendous amount of people movement as well.
Yeah, really important question when we think about the way that people are changing jobs, the way that people are potentially leaving the workforce. I want to go back to something that you said about the transformation that you saw throughout the pandemic. Do you see this as a permanent shift with a lot of your customers, that their employees could be working from home forever?
I think a lot of our customers are figuring that out. So I would say that there's a subset of our customers that absolutely have found greater productivity. They see better employee engagement, and they're going to continue to work hybrid. I don't see as many absolutes where people are either going to be all in the office or at home. I think they're figuring out the balance. And then there's a subset of our customers that want to go back. And that's something that we really question around, can we go back? And the reason I put that forward is that employees around the globe are telling us that they want to work in a very different way.
I mean, the horses left the barn, right? When it comes to hybrid work, I think safe to say that there's probably been tons of focus groups pre-pandemic. Can it work? Can it not? Maybe we're not ready. I mean, the pandemic, we had no choice, and it worked.
Yeah, that's why we refer to this last period as not only challenging from a human perspective, but an experiment around work where we've learned a lot. And I think for some companies, this question that they had has now been answered, and that they can work, they can innovate, they can collaborate. And in some cases, they can be even better with this hybrid because they can get to talent that in the past they couldn't before.
Well, how has the talent acquisition process been? How has talent retention been at Cisco Systems? You said that some people are referring to this as the Great Resignation. We hear about the labor struggle that employers are facing right now. Tell us what it's been like for you.
And Fed Chief Jay Powell talking about it's a really tight labor force.
It is. So we experienced that as well. What was so fascinating was when we first went into the pandemic, we paused for a few weeks just from a hiring perspective. And we were just kind of getting our legs under us and understanding what this was going to be. And then we had this realization that we were in this for quite some time. And we started the hiring process. And what we found was leveraging video, leveraging the interview processes that we have, we hired like never before. And in fact, I would tell you that last year was probably one of the biggest hiring years that we've had as a company.
Isn't that amazing?
Yeah. And so many employees have never met any of their colleagues face to face.
It's the position I'm in. I started in October last year here.
Yeah, exactly. And there's people that he's now meeting. Is like, I've been talking to you, via remote, and now I'm finally meeting you. It's a very different world.
Yeah, I had a really funny experience last week where two colleagues were meeting. I happened to be there, and one of the colleagues said, "We're friends though," even though I'm meeting you for the first time. And so what I would say is for all companies, we do see that there is a reduced labor pool. We're working incredibly hard to differentiate ourselves, to talk about what we stand for, and to attract the talent that really wants to be with us as well.
Fran, we've got about 40 seconds, then we'll come back and talk more. Do you have to pay up more?
You do, because whenever you have a market where there's a tremendous amount of movement, employees are going to an opportunity and they expect at least a 3 to 5% increase.
Okay.
Is that what you've done, 3 to 5%, or have you had to go even higher? We've heard stories about, double-digit increases for salaries.
It varies based on the market, but yes, it's a huge challenge right now for many companies.
Do you expect it to continue?
I do.
This tight labor for a while?
I do.
Into next year?
Yes.
I love her. All right, we're going to continue talking with Fran Katsoudas. We want to get into their initiatives when it comes to emissions, because they did come out with some big news earlier in this month, August.
Yes.
I can forget where we are. She's Executive Vice President, Chief People, Policy, and Purpose Officer of Cisco Systems here in our Interactive Broker studio. But this is, I think, such a timely week, considering that we've heard President Biden and other world leaders talk about the importance of climate change and what the world, the entire community, private, public sector has to be doing.
We also hear a lot about goals that are many decades into the future that are just coming out now. And Cisco Systems has been thinking about this for years, a lot earlier than a lot of other companies.
Right, and sees the impact of it, and certainly the conversations that go on internally. All right, let's get back to world and national news on this Thursday. For that, we're over to Nancy Lyons in our D.C. studio. Hey, Nance.
Hey, Carol. A panel of experts advising the CDC says Americans ages 65 and older should receive booster shots. The vote was unanimous. This comes a day after the FDA issued an emergency authorization for people ages 65 and older to receive the boosters and those whose jobs put them at risk. The CDC panel will now be looking at other categories of people. Congressional Democrats in the White House are agreeing on a framework for paying for the $3.5 trillion human infrastructure bill. Moderate Democrats have been in tough negotiations with the president over the scale of social spending. The U.S. Special Envoy for Haiti has resigned as the crisis unfolds along the U.S.-Mexican border, involving thousands of Haitian refugees trying to enter the country.
In his resignation letter to Secretary of State Antony Blinken, Ambassador Daniel Foote says he will not be associated with what he calls the inhumane, counterproductive decision to deport Haitian refugees back to their home country. Foote says the U.S. policy approach to Haiti is deeply flawed. He says his recommendations have been ignored and dismissed. Foote was appointed special envoy to Haiti just 2 months ago, following the assassination of Haitian President Jovenel Moïse. In Washington, I'm Nathan Hager, Bloomberg Radio.
No deal following following months of bipartisan talks over police reforms. Democrats say the GOP rejected a bare minimum offer. Republican Tim Scott says it's the Democrats who walked away. Senator Raphael Warnock of Georgia says he's not giving up.
We may be where we are at this point, in this moment, but we're not about to stop fighting.
The White House is also reportedly looking into ways of enacting police reform via executive action. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We are here with Fran Casudas. She's Executive Vice President, Chief People Policy and Purpose Officer at Cisco Systems here in New York, normally based on the West Coast. But you were reminding us that Cisco's got a pretty big presence here in the United States, in New York specifically.
We do. It's such an important market for us. So many of our customers are based here. Mm-hmm. It's a great place for talent, a lot of the technology as well. We're actually in the process at the moment of remodeling our presence here in New York, and a big part of that is hybrid work. And so we're thinking a lot about when you come into the office, how will you work? And so I think you'll see our presence in New York look very different from what it's been in the past.
What do you mean by that? How is it going to be different?
So the biggest difference is fewer people will come into the office to work on email or to be in video calls. So when you come in now, you're coming in to be with your team. You're coming in to be with customers. And so the site has to be so much more team-centric than ever before. And so you're going to see a lot fewer of the cubes and the individual offices and a lot of huddle space.
So physical changes.
Absolutely.
Do you need, a big question that, Fran, we've been talking a lot about is what is the use of commercial real estate going forward? You still need to have space, though, or do you need less?
I think it's both. So
Okay.
I think that all companies right now are assessing how they're going to work, how much space they need. What we're finding is there's a lot of investment in spaces now, either for safety reasons or in expectation of people coming back and really wanting to just upgrade the space as well.
How are you thinking about your presence in New York in the future in terms of headcount?
Yeah, I would say it's a really important growth area for us. And so we look at about 5 key areas across the U.S. New York is one of them. And so we will continue to hire and really attract and recruit the best.
You talked about it being a tight labor market. What's the New York labor market right now for the type of workers you're looking for? Just got about 15 seconds.
It's incredibly competitive. And so this is a place where the wonderful thing is you see the skills that we're looking for,
right?
But you see that the talent has a lot of different options.
All right, we're going to continue with Fran Casudas over at Cisco Systems. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Nike shares, now down by 1.5% after hours. Nike posted first quarter sales that missed Wall Street estimates as lockdown-related production delays hobbled the company's efforts to meet strong demand for shoes and athletic wear. A couple of company records for Costco. The chain says it hit $60 billion in sales last quarter and topped $5 billion in full-year profit, both for the first time. Thanks to swiftly growing online sales, Costco's full-year revenue increased 17.7%, biggest jump for a fiscal year since 1992. Stocks rallied today amid growth optimism. S&P registering its biggest two-day gain since July. S&P up today by 53 points, up 1.2%. The Dow up 506, up 1.5%. NASDAQ up 155, up by 1%. 10-year yield 1.43%. Spot gold down 1.5%, $17.41 the ounce. West Texas Intermediate crude up 1.4%, $73.24 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're still here with Fran Kasudas. She's Executive Vice President, Chief People, Policy, and Purpose Officer at Cisco Systems here in our Interactive Brokers studio. So talk to us about the new commitments. Earlier this month, you guys laid it out, planning to achieve net zero emissions by 2040, achieve carbon neutrality for Scope 1 and Scope 2, and that, I believe, is by 2025?
That's correct.
So go into it. Because you guys have been doing this for a long time. What's the difference? What's the new stuff that we need to know about?
Yeah, so I would say we have been doing this for a long time. And here's the most important part. For companies to achieve these goals, which are really big and even bigger if you're a hardware and software company, it takes every part of the organization to be focused here. And it has to feel like a key part of running your business and not something that sits on the side, because these goals are pretty significant. And so we've been doing this for a long time. The four big areas that we're focused on right now, the first is hybrid work. As we talked about, we believe that will be incredibly positive for us. The second thing that we're doing is really focus on the reduction of carbon emissions. And we're investing in technologies that I think will give us all optimism. There's a company that we invested in called Remora. They actually won a prize with us. And they're doing carbon capture for large semi-trucks. And that is so important. The third area that we're focused on is all about renewables. And so as an example, in the US, we're 100% renewable electricity, several countries across Europe as well, and we'll just keep on pushing. And then I think another element, and this is the most exciting, is we're looking at the way in which we're developing our products, which really power the internet. And one of our new products, Silicon One, is a chipset. And what it does is it reduces the amount of energy that our customers use by 26 times. And in addition to that, it's much smaller than previous products, so it doesn't take as much packaging. And so when you have this type of breakthrough across your portfolio, it's going to be incredibly meaningful.
What is the biggest challenge that you think you're going to face when you try to achieve net zero emissions by 2040? Because, you know, that's not that far away.
So the biggest challenge
And then there's people like me, I'm like, why can't we do it sooner? Come on, Fran.
Well, some companies are saying
it always
2050.
worries me when people like are
Some companies are
wonder.
saying 2050, some companies are, you know.
that's true.
Well, think about this. So what you're solving for with Scope 3, which our commitment is by 2040, is you're solving for the way in which your customers are using your products.
So you go through the whole chain here.
And so you go through the entire supply chain. And so the interesting thing is what we control is Scope 1 and 2. And so that we're doing by 2025. But 2040 is a much more challenging play because it's Scope 3, and we have to look at everything we do.
And Scope 1, I had to learn a lot about this. I had talked with Fran for a panel for here at Bloomberg. Scope 1 is direct greenhouse emissions that are controlled by the company, Cisco. Right. Scope 2 is indirect emissions from things like electricity, generation of that, steam, heating, cooling. But you're right. 3 is you're really pushing further out.
Every single thing that your company creates with your customers is what you solve for in Scope 3.
How much of that is in your control?
So this is where it gets complex, and this is where we're going to have to have...
Or is everybody aligned now?
Right.
This is why it's so wonderful right now that so many companies are coming forward with commitments, because it's going to take all of us to achieve this. We're going to be so dependent on our supply chain, and so we've been working with them for 10 years, but there's a lot of work that we need to do to get there and to make it something that feels like it's within our control. The only other thing that I would add is there's also some new, I think, baselines that are being established. We just signed the Race to Zero. That's something that we're really proud of because, as you know, that's a consistent threshold. It's scientific. We're doing that together as part of Global Citizen with many of our peers in industry, and it will have tremendous impact as we move forward.
I guess what's interesting, too, is I wonder about the conversation that's going on when it comes to climate change. We heard President Biden talk about it, other world leaders. Is the conversation the right one, especially since you guys have been doing this for a while? Are people taking it seriously, maybe more seriously after the pandemic, where we saw as the world shut down, skies were clearer, like we saw the impact, but we've also seen fires on the West Coast. We've seen what climate change is doing to our world.
I think the conversation could be so much more opportunistic. I think if we all look at some of the benefits from a business and from a planet perspective in doing these things, I mentioned one of our products. Our customers love that product. It is one of the fastest out in the marketplace. That's a win for us.
Did your customers put more pressure on you guys after
Absolutely.
the past year or so, or a couple of years, when it comes to climate change and saying?
Yes, and I think that helps. I think the more that our customers can share with us what they're trying to achieve, we'll work together. But I think the conversation right now is so focused on the downside as opposed to the opportunity. And if we look at the business, I think we'll have a different approach to it as well.
We got a hot headline coming in that I just wanted to break. The White House is weighing invoking defense law to get chip supply data. Gina Raimondo gives firms 45-day deadline for chip supply details. The Commerce Chief is concerned about chip bottlenecks and stockpiling.
So essentially, this is a Cold War era national security law to force companies in the semiconductor supply chain to provide information on inventory and sales of chips. When you hear something like this, I mean, the government is looking at supply chains, looking at things that are crucial to our security. What do you think?
Well, I think it's something that we're all focused on at the moment. The supply chain challenges, even talking about Nike a little bit earlier, to the chip element of it as well. I think we're going to have to get creative. We feel very fortunate at Cisco. We have a great supply chain, but I think all of us are trying to navigate through this and do best by our customers.
But it's stressed right now, right?
It is, absolutely.
Give us an example of how it's stressed, of how you're experiencing that stress at Cisco Systems.
So basically, like so many of our customers and partners, when you can't get access to a product or technology, we have greater lead times for our customers. The nice thing right now is because we're all in the same boat, I think our customers are incredibly understanding, but these are important build outs. And so we are doing our best to prioritize, to work with them, to ensure that we have the partnerships that gets us access to products as quickly as we can, but it's a challenge.
One thing I want to just end with, Fran, because I felt like when I talked with your company CFO and you about the conversations, I mean, you are a senior executive there. They have put sustainability, people, policy, purpose at a very high level at your company. Financially, it makes sense for you guys to pursue all these initiatives. You see the payoff.
It does. It's a tremendous amount of work. I do think that the magic is that this type of work has to be both bottoms up and top down.
Right.
And whenever we do that at Cisco, we win. And so what that means is the people that are closest to the supply chain, the people that are closest to the travel policy, all of us working together, and then our executives owning it and holding us accountable and measuring is really the balance in how we win.
All right, we got to run. Thank you so much. We covered a lot of ground. Really, really appreciate it. You are listening to Bloomberg Business Week, and of course, our thanks to Fran Kasuda. She's Executive Vice President, Chief People, Policy, and Purpose Officer here at Cisco Systems, here in our Interactive Broker Studio. Not here at Cisco Systems. We're actually Bloomberg. It's been a long day. It's been a long week. It's been a long 2 years. Right, Fran?
It has.
What?
It has. I'm just thinking, like, we're still, this is such a big deal for her to be in person with us, right?
And I have to say, I did do a panel with Fran a while ago, and it just,
virtual?
how they are doing it. We did do it virtually, yeah. But we're getting in person, which is great. For the whole Business Week team, have a great evening. This is Bloomberg.